The Federal Reserve has been the United States central bank since 1913, but is actually its third attempt at central banking. The first Bank of the United States was created in 1791 to help fund the country's debt from the Revolutionary War. This private institution, modeled after the Bank of England, was chartered by Congress in Philadelphia and differed from today's central banks in many ways. For example, the U.S. government owned a 20% share, while private investors, many overseas, owned the rest. And unlike today, it was not solely responsible for the country's money supply. State banks issued their own currency as well. Founding fathers Thomas Jefferson and James Madison opposed, arguing that the Constitution didn't empower Congress to establish such a bank, that it benefited large business over farmers, and led to government control by foreign interests. After all, 70% of the bank was owned by other countries, including Great Britain, the very nation they fought to break free from. When the bank's charter came up for renewal in 1811, it lost by a single vote. The War of 1812 put the United States in another financial crisis. As a result, the Second Bank of the United States was established in 1816. The second bank was like the first bank, only larger, with more money and more control. In 1835, the national debt was paid off by President Andrew Jackson. It's the only time in history that the U.S. has paid off its debt. Jackson disliked the second bank, believing it was the cause of inflation, financial manipulation, and corruption, and that gold and silver was the only true money. Jackson vetoed its renewal in 1836. For almost 80 years, the U.S. went through different eras of banking. After various financial panics around the nation, like the Panic of 1907, in which the New York Stock Exchange dropped almost 50% from the previous year, a call for banking and currency reform was crucial. In 1913, the Federal Reserve was born. This new and powerful institution would regulate banks, manage the nation's money supply, and issue a single new United States currency. In addition, it would stabilize prices by controlling inflation and deflation. But since the inception of the Federal Reserve, the dollar has been inflated almost 2,000%, making the price of goods rise over the years. What will these basic items cost you in the future? The US dollar is steadily eroding. Luckily, there's a way to protect your savings as the dollar continues to fall. Visit dailyreckoning.com, founded by New York Times best-selling authors Bill Bonner and Addison Wiggin. Simply sign up with your email address and receive daily articles full of great tips, free.